What's up, my people? It's your boy Ola Tony here, and I'm back again with another banger video. In today's video, I'm going to give you guys a very simple forex strategy which has a 95% win rate. Guys, this strategy is very simple. But if you want to find out, stay tuned. Welcome back, guys. I'm going to show you a scalping strategy. It's a breakout trade. It's all about catching the breakout in a trending market. So let me just show you guys a quick demonstration about that before we move to the live account. So let's say we have a downtrend, a lower low, higher low, lower low, higher low, lower low, higher low, lower low, and a higher low. They had a bit of consolidation, then the market pushed to the upside. So we had a trending market to the downside. This is what we are looking for in today's strategy. We are looking for a trend, whether to the upside or to the downside, and what our aim is to catch our aim is to catch this breakout, we want to catch this long move. Sometimes it's short, sometimes it's long, but we are just trying to catch this move. So same way with it, vice versa. So this is your trust case. So let's get on the chart and let me show you guys what we're going to do today. So I'm on the AU USD on 15 minutes time frame. So guys, let me just explain how the time frame works. So first, we're on the 15 minutes. This is a scalping strategy. We are going to spot the trend of the market on the 15 minutes. So whenever we see an opportunity, we move to the 1 minute, then enter our trade. Some condition needs to be met before we enter our trade. I'll show you everything step by step. Understand? On this channel, I'll give you guys quality trades, quality strategies. Understand? We try our best to eliminate any form of losses to the barest minimum. My goal is to reduce our losses to the barest minimum. Understand? So let's get started. Okay, let's start from here. So so I'll advise you, anytime you notice a trending market, you should follow it up with a trend line, because sometimes the market might very fast. Understand? Because we need to catch those moves early, because we are on the 15 minutes, but we are trading on the 1 minute. We are on the 15 minutes so that we can see the bigger picture. You understand? So that we can be safe, we can enter a more quality trade. I hope you guys understand what I'm saying. So I'll draw my trend lines, and I think it's going down, so it's giving us a bearish signal. So draw a trend line and then follow the market. So let's see how it goes. Okay, market is moving down, still going down, still bearish. Okay, so it has a rejection here. Let me pause it. There was a rejection here. What does this rejection signify? It signifies that okay, the market is still in tune with the trend line. It's a retracement. It retraces back to trend line. In a downtrend, the market can't just be going down. It needs to retrace and move down inside. So that's what happened right now. So it got rejected here. Then okay, I'd say another retracement here. And what again? Okay, consolidation. So anytime you notice consolidation on the markets or during the trend line, you move on to the 1 minute. Understand? Because you remember, this is scalping strategy. So we go to the 1 minute. So we'll go to the 1 minute. Then so in the 1 minute, the trend has been broken already. Here you can see what I'm saying. we are just using the 15 minutes so that we can see a bigger picture. You understand? Because it's events that happen in the 1 minute, 2 minutes, 5 minutes that sum up to what happened 15 minutes and any other higher time frame. So now let me explain why we added the MACD. Start again. Now let me explain why we added the MACD. Added the MACD so that we can know the real trend of the market. We can know the real high and the real low. So now when the MACD is green, it means it's a high. So this place is a high. When it's red, it means it's a low. So now before we can be confident that we are in an uptrend or the market is trying to change its trend, is that we need to see a break of structure to the upside. Understand? That means a high must be broken. A high must be broken. So that means this high must be broken. And now before you can even say a particular high must be broken, is that high must be at a very significant level. The high must occur after the trend line break. The high must occur after the trend line break. It might be immediately, but must be after the trend line break. And the high too must have multiple support and resistance points. I'm going to show you guys what I'm saying. So I think this is a resistance point here. So let's take out our tool and map it out. There's some sort of resistance here. Some sort of resistance here. If we check, let's see. If we go back, we can see. If we go back enough, we'll notice that this was a key level. If we can go back enough, I'll to show you guys some things. You can see this is a key level. So this point was a support. This point was a resistance that turned to support. You see, this is a very strong key level. So that giving us more added confirmation. So before you can say the market is on an uptrend, the market must break from this. It must break from this from this resistance point. So before we can say the market is an uptrend, it must break from this strong resistance point. So let's continue. Let's see what happened in the market. Let's continue. Let's see. Okay. Okay. All right. I think we had a break. Okay, it's consolidation. Okay. We've gotten the break. We've gotten a break from the resistance right now. We've gotten a break. So now, after you've gotten the break, what you need to do is that you need to wait for a retest before you enter. Like, you don't, after I see the break, you don't just jump into the trade. No, you need to wait for a retest to that zone. Remember, we are only looking for high probability trade. We are sniper traders. We are not assault rifle traders. You understand? We are sniper entry traders. We are not just shooting anyhow without aim. We are aiming for the best possible opportunity. So let's go. All right, let me extend our resistance. So now resistance has turned, so we want resistance now to turn to support. We want the market to retrace back, and sometimes the market might not retrace back to the so maybe support or resistance zone, but the market must retrace close to that zone. You will know. So let's just see what the market offered us here. So okay, the market is moving to the upside, moving. All right, so we have gotten our entry. We've gotten our entry. So anytime, so I told you earlier, the market, I told you, after the break, we don't just jump. We wait, because the market can, when after a break, the market needs to come back to consolidate. So after the consolidation, that's when we enter. So we enter for our long. We enter our 1 to 2 risk reward ratio. We enter for our 1 to 2 risk reward ratio long position. We enter for 1 to 2 here. Then your stop loss won't be here. Your stop loss will be below this. Your stop loss won't be below the support or resistance level, because the market might try to reverse back to just maybe take out people that are here. So your stop loss will be in between the first resistance support zone, which is this one. So our stop loss will be in between here. Let me show you guys the support zone I'm talking about. So stop loss will be in between that, not here, not here, not here. It will be in between this. Understand? High probability trade, remember. So we are just going for 1 to 2 risk reward. We are not going to be greedy. We are not going to be greedy, guys. We are not going to be greedy. So that's it. So I think this move we got our profit. Yeah, we got it. So we won the trade. So after you win, you go back to your what? 15 minutes. You go back to the 15 minutes again. Then scout for more opportunities. And in the 15 minutes, we watch the market. We may wait for more opportunities. So it's an uptrend, so we can like get our trend line and start following the market, so we don't miss any move. So let's see. So now we had a retracement which respected the trend line, which means we are in good accordance with the market. So let's see. Okay, and we know after a retracement is what? It pushed to the upside. That means if it's in a bullish trend. So okay, another retracement. Okay, they did respect our trend line. What do we see? Okay, respected it. Respected it. Okay, let's see. Okay, we had some retracement. So what we will do, we move on to your 1 minute. Let's look for opportunities. Go to your 1 minute. Let's look for opportunities. Yeah, so we're on the 1 minute time frame. Now I told you guys, before we can verify this is a low, that before we can verify that this is a downtrend, a low must be broken. Yes, sir. We need to see a break. We need to see a change of character. Change of character only happens when a low is being broken. You understand? That means if we had an uptrend and the low was broken, and we have a change of character. Change of character means the price of the markets, the trend of the market is about to change. The direction of the market is about to change. All right, very good. So I think this is our low here. So we want this zone to be broken. So now we need to see that the low is broken, because now we can check for our MACD. This is our low. So we bring out our tools, then map it out. This is the low that I want to be broken. And now you need to check. Now before is a significant resistance zone, we need to see at least 5 zones where the price was respected when it got to that level. We need to see at least 5. Remember, high probability trades, that's what we are taking. We are not just shooting anyhow, entering a trade. No, high probability trade. So now let's see. One, it's one, two, three. So we can see here. So 4, 5. So it has met our criteria. So this is a verified resistance zone. So that means anytime the market break this level, we know yes, we have good probability that this is a downtrend. So let's see. All right, market is respecting that zone, consolidating. Let me extend our resistance zone. Okay, so market is still consolidating. Okay, bounced off the zone. Okay, let's see. Okay. See. Let's see. Okay, let's see. Market respected that zone as moving upwards. And now, guys, let me add to that. Whenever there's a reversal, you need to mark this zone too, because this is the zone that caused that reversal. This is the zone that caused that reversal. You understand? This is a resistance point that caused the reversal. So maybe anytime the market breaks here out, you know. So anytime the market breaks, you know, and there's a trend continuation. So let's continue. So what's gonna happen? Okay, respected the zones, respected it. Okay, let's see. Okay, broke it. Okay, still respecting. Still okay. Okay, broke the zone. Okay. See, oh yeah, okay. Okay, so I guess he respected the zone. So this is hard. This is the right time, because if we can go back, we can really plot the right resistance zone with what had happened in the market previously. Understand? So that's why I normally go back. So, but since this is not that relevant, we can easily find that zone. That's why I didn't go back. So pay attention, guys. That's why I'm using this method of teaching, so that we can see the trade practically, like live, so that we can see how it really feels like. So yeah, okay. I think the market is trying to reverse now. Okay. So the market finally broke the resistance point to the upside. Okay, so it means a trend continuation. Understand? So let's head back to our 15 minutes and see what's going on there. All right, so it's a trend continuation. So with the trend continuation, then we'll adjust our trend line. So we adjust our trend line and follow the market. We adjust our trend line and follow the market. So what do we have? Okay. A retracement again. So what's going to happen here? Will it be a breakout or a pull to the upside? Let's see. Okay, I think we're having some downtrend here. What do? We match on to the 1 minute. Go to the 1 minute. And go to the 1 minute. Yeah, so you're on the 1 minute. Yeah, so we need to see a low to be broken before we can admit it's we have a change of character. And remember, the low we are going to use is a low that was being formed after the trend line break, not before. Understand? So after the trend line break, so let's look for a significant low. Let's see what the market is going to do. Let's see. Okay, all right, so we found one. This is it. This is the low. So this is the low here, right here. So we want the market to break this. The market needs to break this. Now before it can be a significant low, what did I say? The market must at least respect that zone a minimum of 5 times, 5 good times. So let's count. We have 1, 2, 3. I think we have 4 here. Let's go back in history, because we are looking for strong zones, so that when time we see a break, we know, yeah, something really important happened. Something really important happened. So let's see. Let's go back in time. Let's go back in time. I think if we want to go back in time, we'll still find the zone, but let's not just dwell too much on that. But that's a significant zone, because now to avoid going too much back in history, one advantage you can see is that anytime a resistance, this a resistance turn to support, just know that it's a verified zone. Anytime you see such, know it's a very strong zone, because when something like this happens, to me it equals to 3 touches to me, because it signifies that's a very strong zone. And after that, I saw the market respected it, and if the market breaks it again, you know that yes, their momentum has gotten into the market at that moment. So let's go. All right, we do break. Okay, we saw a break. So I told you guys, after the break, I think it's a huge break to the downside. So I told you guys, after the break, you don't just jump in and enter. You wait for what? A retest. So let's see. All right, so we enter from the retest. We should have gotten the trade, but I wanted to see what's unfolding. So we enter from the retest. Enter a short. Enter a short from here. And I told you this is our resistance point here. And let me draw that so that you guys can see. It's our resistance point here. So our stop loss will be in between that, like half of that, yeah, because we don't want to get stopped out, because sometimes the markets might be crazy, might just try to take people out before moving back to the downside. So Yeah, let's see what will happen. All right, respecting that zone. All right. Okay, I didn't put our 1 to 2. About 1 to 2. Yeah, perfect. So let's see how the market played out. So let me adjust this. Yeah, there's this. Okay. So okay. Our stop loss should be higher than this, but I'm not sure maybe it's going to get stopped out, but like to be safe, you know what I'm saying, guys, to be safe, because the market is very crazy at times. So let's see. Still consolidating in our resistance zone. I think maybe it's trying to break out here. I don't know. Let's see. So finally, I think we have a break to the downside. Yeah. So guys, what's going on here is that this is just giving you more opportunity to enter, because you can enter. Maybe you missed here when you came here, you could enter here, you could enter. You see, you never got to our stop loss. Half of this, guys, half of this, because if it gets to this stage, just know that trade is not going to come. But you see, it came here, but the trade still coming. Understand what I'm saying? So guys, if you can trade like this, okay, TP hit. So guys, if you can trade like this, I guarantee you profit. You can see. So it's just simple as this, guys. Very simple. Then you move on. You move on to your 15 minutes again to do what? To monitor the chart. You get your trend line, then follow the trend. Simple. So that's it for me for today, guys. If you are new here, subscribe to this channel, like, share, so that you can encourage me and support me to keep posting more content like this. So bye for now, guys.